Hi friends, markets have been very volatile lately, and one sector which has corrected significantly has been the IT sector. Most of the stocks in the IT sector have shown moderate revenue growth on the back of a high base and weak seasonality. Margins have contracted on the back of supply side issue. However, certain mid-tier companies' margins have remained strong on the back of their growth. Companies have managed Q4 FY22 by using levers such as pricing, lower subcontracting costs, operating leverage, and pyramid rationalization, which is nothing but having a larger number of employees with less than 4 years of experience and having fewer employees with progressively higher experience. In contrast to concerns over IT companies' growth in US owing to Fed's interest rate hikes, strong deal wins, healthy deal pipeline, and higher hiring indicates a strong underlying demand environment in the medium term for Indian IT companies. The current correction in IT stocks across the board provides a good investment opportunity given that the revenue growth in future will be sustained in double digits along with strong return ratios. In the given scenario, we discuss with you 3 stocks that have the potential to add the much needed alpha returns to the investor's portfolio if added at the levels that we have mentioned going ahead. The first stock is L&T Technology Services (LTTS). LTTS has emerged as one of the leading global pure-play ER&D services company providing services to manufacturing, technology, and process engineering companies to help them develop and build products, processes, and infrastructure required to deliver products and services to the customers. The company leverages the strength of the parent company L&T, a leading Indian conglomerate. It caters to 5 industry segments, namely transportation, industrial products, telecom and high-tech, process industry, and medical devices. The Q4 FY22 revenue and profit were in line with the street's estimates, and the company has been witnessing an improved order pipeline. LTTS has won an $100 million plus deal, an $25 million plus deal, and 4 other deals with a total contract value of $10 million plus. LTTS guided for revenue growth of 13.5 to 15.5% compared to the guidance of 13 to 15% during Q4 FY21. Management aims to maintain 18% plus margins and would manage headwinds through cost levers. At the current market price, the stock trades at 27.7 times its FY23 EPS of 126. The stock trades at a fair valuation on the valuation band. Technically, investors should look at entering the stock at Rs 3060 levels. The second stock is Coforge. NIT Technology was rebranded as Coforge in 2020. Coforge focuses on select industries with 3 key units: BFS, transport, and insurance. And other industries include retail and healthcare, high-tech and manufacturing, and foreign government projects. Some of the initiatives taken in the last few years have helped the company to develop deep domain knowledge in the core verticals. The management consists of 11 people reporting to the CEO from Tier 1 companies and a better incentive structure along with shifting of sales personnel near to clients' locations, and it has improved the sales growth. The Q4 FY22 sales and profit numbers have been in line with the street's estimate. The company has expanded its EBITDA margins, which is the highest ever, on the back of increasing offshore mix in revenue. Management has highlighted that Europe and BFSI segment are doing well and the momentum is strong in the travel vertical. Order flow increased by 49.8% year on year and the executable order book stands at $720 million. Management highlighted the change in strategy in the domain, differentiated offerings, full tech stack offerings to clients, and unwavering execution focus to drive further growth. The company is targeting the $2 billion revenue milestone. Although attrition has inched up to 17.7% in Q4 FY22, it is the lowest in the industry. At the current market price, the stock trades at 22.5 times FY23 estimated EPS of Rs 161, which is trading at a fair valuation on the valuation band. Technically, investors should look at entering the stock at 3,225 levels. The third stock is Cient. Cient is a leading offshore engineering services firm catering to the manufacturing industry. The company has competencies in UT&DA services which cater to utility, transportation and government segments, engineering design services and software services. The company has strong domain knowledge and comprehensive solutions capability in the GIS, which is Geographic Information Systems segment, along with a healthy pipeline of deals. The company's skills in areas of mapping and designing across diversified segments and in a variety of end-user IT environments give it an edge above the other players. The company reported Q4 FY22 numbers above street estimates. It has won 7 large deals with a total contract potential of $134.9 million. Order intake in Q4 FY22 was at $209.8 million compared to $226 million during the last quarter. Management expects wage hikes and key investments to impact margins, but will be offset by price hikes and operational efficiencies. It guided revenue growth for 13 to 15% in constant currency terms in FY23. It has guided EBIT margin in the range of 13 to 14% in FY23. At current market price, the stock trades at 14.8 times FY23 EPS, and technically, investors should look at entering the stock at the range of Rs 760 to 710. LTTS has corrected by 41.7% from the highs of Rs 5,985. Coforge has corrected by 41.4% from the highs of Rs 6,158, and Cient has corrected by 67.4% from the highs of 1,181. Given the sharp correction and reasonable valuation, long-term investors who are holding this stock should continue to hold it, but any new investors should enter the stock at the levels mentioned before. This is Viral Shah signing off. Happy investing. Thank you.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.
Thank you.